I'm still trying to reach out to those who are not.
Okay, sure, sure. I've seen the call, so I'm sure we'll join.
Good morning. Please, are we started? Good morning.
No, please, we've not started.
Good morning, Auntie Mercy. We've not started yet.
Okay, thank you.
It's quite disturbing from my end. I'm unable to use my laptop. So you are okay with that, and you can see my screen. Can you hear me?
Yes, we can hear you.
Yes, sir. I can hear you. I can hear you. So you have to tell me the areas that is coming in your exam. But for me, what I know, okay, so this is question 1. Question 1A. All right. So for me, what I know is that over the period, capital budgeting is one thing that has repeatedly shown in the exam. So I'm hopeful that this time around too, it will come. Right. So if we start studying from that end, at least it puts us on sorry, the way in manner we're going to go with this, we are able to pick some understanding from it, and we can practice it, and then be able to deliver when we are asked to do that. So greatly, capital budgeting will bother on we trying to assess a certain investment portfolio or certain projects, wanting to know whether it will be viable for us to invest in one firm or the other, or invest in a certain project or the other. What we commonly use to do or perform that judgment is using what we refer to as NPV, net present value, PI, profitability index, payback period, and then discounted payback period. We also have what we refer to as IRR, internal rate of return, right? So under capital budgeting, I've mentioned about 4 or 5 things that comes under it. Number 1, NPV. Number 2, profitability index. Number 3, payback period. Number 4, discounted payback period. And internal rate of returns, IRR. These days, they've modified the internal rate of return, because if we leave it to your rich, it will be a bit difficult for you to work on them. So you are going to do modified internal rate of return, MIRR, right? So that's what we will be doing in this class. So I have this list of questions for us to test our understanding on. Who will be our reader? Who will be our reader?
Okay, let me read if nobody's reading.
Go ahead.
So question 1, question 1A. Compute the following NPV, PI, payback period, and discounted payback period at 8%. Project A and Project B have cost of 10,500 Ghana cedis and 16,000 Ghana cedis respectively. Which of the projects will you invest in? Asset A depreciates by 1,600 Ghana cedis, and asset B depreciates by 1,500 Ghana cedis. Calculate the average net income and the ARR. Which would you invest if minimum ARR is 9%? And then they've given the figures. Year
Okay.
1. Okay, yeah. Should I go on with?
So at least for we go ahead. Go ahead with the table.
Okay, so the table reads year incremental free cash flows A, incremental free cash flows B, and year 1, 5,000. That is, and the next B is 700. And we go to year 2, 4,000 and 1,000. Year 3, 3,000 and 3,000. Year 4, 1,000 and 4,000. And year 5, 700 and 5,000. And then question 1B, compute the MIRR at
Okay, so
8%.
let's handle question one first.
Okay, sir.
Let's handle question one first. Okay.
Okay.
Does the question look familiar? Does it look like something that you could handle it in an exam section? Let me just pick your view on that. Does it look like something that you could just easily have done in an exam section?
For me,
Just the
no.
question A.
No.
Oh, okay. 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 So let's see how we're going to handle this. First, the question requires that we do NPV. So in class, we were told that NPV simply is looking at your cash inflows discounted minus your initial cash outflow, right? So your cash inflows discounted minus your cash outflow. So where do we find the cash inflows? Where do we find the cash outflows? For the cash inflows, it's simple. Of course, we can see it on the table right here.
Yes.
These are the
Yes.
cash inflows.
Yes.
But if we talk about cash outflow, we're basically talking about the cost that you incurred on the project, especially for this project, we have an initial cost, right? So in class, they told us about initial cash outlay, or initial costs, right? So if we pick it from here, this become our cost for project A, and then this becomes the cost for project B. How do we handle this? I want to handle this in the tabular form so that at least we can follow effectively. So if I'm answering a question of a sort, what I would do is that first I would include the initial cash outlay on the table. So that is the cost happening at period 0. So I'm able to say that for project A, the cost that I incurred on project A will be 10,500. Cost incurred on project A is 10,500. So I can put either a negative or put it in a bracket, 10,500, just to indicate that that's a cost to me, right? And then for project B, I'm also incurring a cost of 16,000, right? 16,000. So we come here, 16,000. All right. So this is just the beginning. Let's start properly. Solution. Solution. I think I may have to enlarge this a bit. Let me increase the fonts from here. Okay. So I said that NPV is just a very simple concept that evaluates your performance in terms of profitability, net present value, right? So you want to know if you invest in project A, at the end of the project has a 5-year life. So you want to buy a car for Uber, and then you determine that the car will last with you for 5 years, right? So at the end of the 5 years, will the car business be profitable, right? So we're looking at how much you're going to get every year from the Uber business. In year 1, we're hoping that we're going to get 5,000. I don't know whether it's $5,000 or cedis. I think it's cedis. Okay, cedis. It's here. So year 2, you're projecting that you're going to get 4,000. Year 3, it goes on like that. So if we bring these values to their present days, and then we subtract the cost that we incurred on the purchase of the car, or maybe on getting the car into a usable condition, whether the car business or the Uber business will be good, right? Okay, so what is the formula? The formula is bizarre. I don't know. Sorry, my voice is some way. I'm a bit tired from yesterday, but we'll be fine. So in a very simplest context, I write that NPV to the sum of discounted cash flow, discounted cash inflows minus initial cost. Initial cost. Some people will call it initial cash outlay. Whichever way that you put it, it's fine. All right. But there is a formula to this. There was one Hunhundius formula to this, right? So let's see if we can look at the formula, right? The formula is a bit Hunhundius, but we will see if we're able to look at it. Give me a second. Let me get you the formula. Okay, so you see what I've written here? Very nice, right? But this is the actual formula, and then I would explain it to you very soon. So in the exam, this is what you see on the formula sheet. This is what you're going to see on the formula sheet. NPV is equal to summation of, this is summation of your annual cash flows. Annual cash flows. And then if you look at it, they've written T to it with time. So we have periods of 5. So sum of your discounted cash inflow. In this test, we are looking at ACF as your inflows, right? ACF as your inflows. 1 plus K here means that you are discounting the cash flows, right? So what you see here, summation of ACF divided by 1 plus K simply means the first section of my write-up, sum of discounted cash inflows, the sum of discounted cash inflows minus IO. This is IO. IO is initial cash outlay. Initial cash outlay, right? So let this be at the back of your mind. It's not too obvious. So if you identify this formula on the formula sheet, the meaning is what I have written here, right? The meaning is what I've written here. Okay. So what do we mean by a K here? I'm going to write this session to seem more simpler. Try my best to make it more simpler. There is a discounting factor that we use, right? The discounting factor is simply the cash flow divided by 1 plus R. So in place of K, I'm using R, right? And then the T here is time. Okay, the T here is time, and time can never be a 0. So that's why it's saying that it's from T is equal to 1. It could be equal to 1 to infinity. Okay, so let me try to rewrite the first section again. I'm saying that it will be CF divided by an open bracket 1 plus R. And then we saying that R is the K in this context, raised to the power N. raised to the power n. Okay. So now we need to know what is r here and then what is n here as well. Raised to the power n. So let's try to define the items in here. R or K. R or K here is the rate given here, right? So we've been given an 8. That's the discount rate. The discount rate is just talking about the noises in the market aggregated together, right? I.e., we can we can talk about then we are talking about discounted rate. So R is equal to 8. R is equal to, or key, R or key is equal to 8.
Can you please repeat? You went off.
Eight. And what's n? N up to 5. 1 up to 5. Okay. But 8 divided by 8 0 n as specified. Sorry, I didn't get you. I didn't get you. Can
So
you
I'm
hear
saying
me?
hello, you went off. Can you please?
Stella, can you guys hear me?
It's better now.
Hello, you went off when you were explaining the formula.
Okay, so let me pick the formula again. Just indicate it at any point in time that you have a challenge, and then I'll just resolve it. Okay. So what I said is that the summation ACF divided by 1 plus K raised to the power T is what I have simplified here, right? It's what I've simplified here. And I'm explaining that to mean that cash flow divided by 1 plus R. So in place of K, I have used R. Okay. And then I'm saying that this session is what I have referred to it as the sum of discounted cash inflows minus IO. The IO here is initial cost or initial cash outlay, right? So the formula is what I've tried to simplify here. Okay. Then I said that let's pick the details in the formula and then talk about them. We have a K here or maybe an R here, whichever way that you want to go. We want to say that our R is the discounted rate or the discount rate, the discounted rate. Okay. And then we want to know of N. The N in this item is equal to 1 up to 5. Or you can say 0 up to 5. That's the period. 0 up to 5. That's the period. So the number of periods. Okay. Now, let's try to pick up on the cash inflows. You know, the cash inflows starts from this up to this. So we want to pick up on just project A. We want to find the NPV for project A. So let's try to do that. NPV for project A. For project A is equal to NPV for project A is equal to the cash inflows are, okay, so the cash inflows are 5,000. I'm opening a bracket, a big bracket. So I have 5,000 divided by, I wish I can use the equation sign. Give me a second, let me do that. Set equation. Okay, good. So that's 5,000 divided by an open bracket, because we're talking about this, an open bracket, 1 plus R. And R in this context is equal to 0.08. We close the bracket, then we raise it to the power 1. Raise it to the power 1, right? Plus then the next item is 4,000. 4,000. So what have I used as 1 here? I've used the year, the period, right? So the period 1 becomes the nth term here. Okay. Then I move to the year 2. Year 2, my cash flow is 4,000 divided by an open bracket, 1 plus 0.08 raised to the power, this time around it will be 2, right? So take note, because I'm using this item. Plus, then I move to year 3. I have 3,000 divided by an open bracket, 1 plus 0.08 raised to the power 3, plus, I'm at year 4. So 1,000 divided by an open bracket, 1 plus 0.08 raised to the power 4, plus 700 divided by an open bracket, 1 plus 0.08 raised to the power 5. Okay. So that is the cash, sum of the discounted cash inflows, right? Right. Okay. Now, what do we have? What do we have left? We have the initial cash outlay. So everything that we have done here, we close the bracket minus the initial cash outlay is 10,500 for project A. So 10,500. Okay. So this is how it would appear for the process that we need to go through in generating our MPV for project A. Right. The process that we have to go through in generating MPV for project A. Okay. Who has a difficulty with this? Yes. Okay. So can we try? Can we try
Hello,
to
Isaac.
generate
Please.
these items one after the other? Yes.
Isaac, please, where did we get the 0.08 from?
Okay. The 0.08 was given as the discount rate, right? So if we read the very first session, it says that compute the following MPV, PI, payback period, and discounted payback period at 8%. 8%, right? So this 8% is the discount rate that we are picking up on, right? And then I have said here that 8% can be written as 8 divided by 100, right? If you punch this on your calculator, 8 divided by 100, it would give you 0.08. Is that okay?
Yes, it's clear.
Okay. Is there any other question? You know, I struggle to hear all of you. The voice is so low. I don't know whether it's my settings or something else is wrong. And then my laptop too cannot connect. Okay. So what I'm seeking to do with you now is that I just need you to help me compute these items, right? So 5,000 divided by 1 plus 0.08. It could be written as 5,000 divided by 1.08. That would be so simple. So let's compute it. Let's compute this. Let's compute this. Let's compute that. And then you will tell me what you got. Oh, how come this one didn't form right? Give me a second. Let me try to put this right. Um, um, Yes, I think this is nice. This looks much better. Okay, so let's work this out. Sorry. So are we done? I just want you to work out for these items from here up to this level. You tell me what total are you getting. You have to pick your calculators. This class, your calculators are very much needed. This very class, your calculators are very much needed.
Are we adding all together?
Yes, we need to add from the one in bracket. The one in bracket ought to be added together, right? After, so you do 5,000 on your calculator. You can even punch everything just as I've entered here on your calculator. If you are good with your calculator, you can do everything that I've done here on the calculator.
Hey, I can't find the raised to the power sign.
Please,
No.
I need,
Which one is the
yes,
raised to
that's
the
what I'm also struggling with. The raised to the power.
raised to
How
the
do I get
power?
it on the calculator?
Oh,
It is an X with a blank box.
It's
from
what?
the X to an X with a blank box.
Oh, okay.
Oh,
Okay,
okay.
I've seen it.
Okay.
Yeah, I see more.
Okay.
Hey. Hey.
So give me a second. I want to show you the calculator. So those of you who are struggling, this is where to find the powers, right? This is X with the black box. Those of you who are struggling to find it. Okay.
I think some of us bought a wrong calculator.
No, when you select it, it continues with the base to the power. It doesn't make you back on track. Or are you supposed to select it again?
So come again with what you said.
Yes, I'm saying when you select the X, when it gives you the raise to the power, so you need to come back and enter the 4,000, but the 4,000 still shows at the raise to the power column.
Yeah, so you have to descend. Use the arrow signs to descend. If you enter that, it will still push you up. So you use your arrow signs to come down. Has it worked?
Oh, okay. Sure.
If you don't enter it well, you would get a problem. So I am going to do it one after the other. I'm discounting this, discounting that, one after the other. Okay. So NPV for project A is equal to. So if you are struggling, you can do it 1-1. So I'm picking on 5,000 divided by 1 plus 0.08 raised to the power 1. If I discount that, I'm going to get, where's my calculator self? Okay, so that will fetch me something around 4,629.37 or 363. Right.
Hey, I didn't get the same answer.
Plus, if you do this, just this, I'm talking about just the first one. You didn't get the same answer.
No.
Just the first one. What are you getting?
Am I supposed to put the 1 plus 0.8 in bracket?
Yes. If you don't put it in bracket, the raised to the power will only be on the 0.08. So I said that in a very simple mathematics, 1 plus 0.08 just means 1.08, right? In a very simplest mathematics, if you want to talk about what is in the bracket, we can just say is this, so that we don't continue with we won't
Okay.
struggle with this side. I
I've
hope
gotten
you
it.
agree with me.
I've gotten it.
So,
Yes, sir.
so and because we are learning anew, I cannot put a lot of things on you. So I have to take my time with you guys. Okay. All right. If I discount 4,000, I'll be getting 3,429.36. Are you getting the same thing?
Yes, 3429.35.
What is the next figure after 5?
5.
Okay, so we want to leave the answer in 2 decimal places. So
Oh.
if you have 355, because the next item is 5, you can add 1 to the first 5, right? So this is what you got,
Yes.
something like that. Yeah. So we want to leave the answers in 2 decimal places. So because this is 5, so whenever you have a figure which is more than 5 or 5, you can run it up to 6, right? If we got 5, 4, then we will run it down, and then it will still remain 0.35. But since it's 5, we can do it 0.36. I hope you get that.
Sure.
Okay. Plus, we want to discount 3,000. If we discount 3,000, we'll be getting 2,381.50.
Okay.
Plus, you want to discount, I hope we are all following this. We want to discount 1,000. When we discount 1,000, we're going to get 737.03. Then we want to discount 700. If we discount 700, we're going to get 476,000.
Please, I have a question, just a quick one.
Oh, okay.
When you are working it out, because I think my calculator is not giving me the right figures, so I want to stop using. But I want to understand something. Do you work out the brackets, the figures in the brackets down before using it to calculate the 5,000?
Yes, we've worked it out here. You know, you can enter this whole thing even on your calculator. You can, depending on the
I think
calculator.
the calculator is a new one, but I think it's not working. Nothing. It's giving me wrong figures all throughout. So
Tell me the figures that you are getting.
so the first one, you saw the 5,000
Okay.
divided by brackets 1 plus
0.008,
0.008, right? Then
Yes.
bracket closes. Answer, it gives me 125,000 divided by 27. So I think that
125,000.
even
First,
when I do 8 divided by 100, it gives me different figures. So I think the calculator is the issue. Because when I use the one on the phone, it doesn't give like that. But the real calculator, the Casio I bought, is rather giving me those figures. So
That is sad.
No, hello, sir. Please, can I come in? She has to
Okay.
press there's this SD thing on the calculator. So when you press it, you get the answer.
I have to press what, please?
There's this is it S arrow D?
So
Yes.
from
When it gives you the
standard
division
to
answer.
from standard to decimals. That's
Yeah.
from standards to decimals. Let me show you quick. Hey, this one that you want us to go to calculator school. I don't know why. This is it. Just above delete. Just above delete.
Okay.
Last but one
Yes, I've seen
item before you see
I've seen
M
it.
plus. That's what they are showing you.
Okay,
Has
so
it worked for
that
you?
is where I will get the answer from. Like I should press that one to get the answer.
Yes.
Yes.
Okay.
They're saying
Okay,
when you
then
press that, you get. Let's solve her issue and
let's
we
give it a
continue.
try.
Yeah, let's solve her issue and then we continue.
Let me give it a quick try and then we'll.
Isaac, while she's giving it a quick try, when I got to year 4, I got 735. I don't know whether I'm doing something wrong.
Yeah, me
realized
too. I
you-
got 735.
735. I realized you indicated 737. So if there's something I'm doing wrong, kindly correct me.
I also have 735.
Can equally be
0.03.
wrong. So,
0.30.
so you,
So
0.30.
0.03.
Yes, again, let's see.
So come again. I didn't get you.
I'm saying kindly punch yours
Let
again,
me-
let's see.
That's fine. That's fine. That's fine. Year 4, 1,000 divided by 1 plus
360.
please let's continue. I will get a new calculator. I'm sure it's the calculator. I'm convinced it's the calculator.
Okay. So it's
Because what you
735.
said is totally coming.
So Stella, I think I've rectified from here.
Okay,
735.
thank you.
Okay.
Okay.
Thank you, sir. Please let's continue. It's the calculator. I'm still not getting it. So
Okay.
I will use the phone calculator. Later on, I will sort it out.
Okay. Okay. I'm sure if it was a face-to-face, I'll be able to resolve it for you. But it is what it is. As it stands. Okay. So we can close the bracket here, right? Okay. Have you discounted the year 5, 700? What did you get?
Yes,
476.
476.
476.51.
0.4. So
476.
47.
0.40.
Mm-hmm.
0.51. I had
40.
0.51. I had 0.51.
0.51.
Yes.
Okay, so we going with the majority. So it means if we are wrong, we are all wrong. Okay, I close the bracket, and then the last figure is minus 10,500. 10,500. All right. So at least from here, it makes life a bit simpler. So we can just go ahead and add all this in the bracket. Right, we can add all this in the bracket and then see what we're
Please,
going to
just
resolve.
a moment. I got
Okay.
0.41.
You going to go for 1.
Yes,
I
I got
also go for one.
476.41. Hey, is it my calculator?
Yeah, me too.
No, it's not your
I,
calculator. It's 0.41.
I also got
It's
0.41.
initially it's
So
476.408. So when you run it
Yes.
over, it's 476.41.
0.41, yes.
okay, so I equally go for one.
Okay.
Okay, then let me do
All
the
right.
discount.
Can we
again.
add? Can we add everything
The
together?
discount factor again.
Should we still
That will make it pure.
bracket it? I
So
say.
there were two voids at the same time.
So I was asking if the summation we should still bracket it.
Oh no! After you added everything here, you can let go of the bracket. Okay. Okay. What are we getting? In fact, let me say today that this is very cheap. In other topics, when I teach, you won't understand at all. If you would understand in a class, it would be just a little. So it would be right that after you go and then watch the video. That one I can tell, especially when I pick up on working capital.
network.
Weighted average cost of capital. When I pick up on risk and return, I don't know whether it's part of the topics that were given to you. Those ones, they may be a bit disturbing, but I mean, you get it. You get it. And I'm just helping you to appreciate that. Don't be so joyous today. I know you are getting it today, but don't be so joyous. There will be hard ones ahead, so that we lace our boot to face that one. Yes, Stella, right?
So please let me disrupt you a little bit. Please, the discount factor for the year 5, how much did somebody get? Can somebody tell me what they had? Because I'm getting 1.469.
For year 5, we have 700 divided by 1.0. Sorry,
8.
yes, 1.08 raised to power 5.
Yes.
So if we discount that, we're getting 476.41.
No, that so when I did the discount factor first. So the 1.08 raised to the power 5. Please, can somebody tell me the answer?
Oh, okay. Someone with the answer, please. Let's go.
The answer, yes.
476.41.
No, not the final answer.
So
Okay.
she demands that we tell her if you do 1.08 raised to power 5, what do you get? That's what she's seeking. She's seeking that we tell her what 1.08 raised to power 5 is. Is that not?
Yes, sir.
That's 1.4, 1.469.
1.469.
Yes.
And when I keep doing it, I still keep getting 476.5. 476.51. So can somebody just
the points, no,
so if you can I just need assurance or confirmation that I'm wrong. So 700 divided by 1.469.
Okay, so well, you see, maybe you are using because you've rounded the figure up, you are using how many decimal places? How many decimal places are you using?
2.
2. Yes. So that's where the issue is coming from, right? So if you keep reducing the figure, it would give you different figures, right? But if you enter it as once, remember that we're talking about if you discount the 1.08, you are getting 1.469320768.
So I didn't add all those things.
Exactly. So if you don't add it, it would decrease your figures as you go by, or it would change the face of the figure as you go by, right? So those of us who are telling us that we getting 0.441, they are right. They are using the absolute figure.
Oh,
right?
okay.
So we are more right than you, because you are not using absolute figure. You are using a rounded up figure. Is it okay?
Oh, okay.
So your
Okay.
answer may change a bit, but the examiner marks plus or minus 1, right? The examiner is
Okay.
aware that some of you are going to use 3 decimal places, 2 decimal places. Some of you would even leave your answers in 4 decimal places. Standard
Okay.
that your final answers are usually left in 2 decimal places, right?
Okay.
Your final answers are usually left in 2 decimal places. So,
Oh, okay.
so that we don't get to change the figure so much. All right.
Okay. So I should just leave it in the long answer and then do the calculation.
So which calculator do you use?
I'm using Casio.
Is it the
991 ES Plus?
Yes. So try and learn how to use how to enter everything together.
Okay.
Right. It would even
Okay.
save you time a lot in the exam.
Okay.
Learn how to enter 700 divided by bracket open 1.08 raised the power 5. Learn how to raise the whole thing on your calculator.
Okay.
I'm saying this because it will save you a lot of time.
Okay.
Right. Compare yourself who is doing this before you come and multiply by 700. If someone had entered that, the person is not going.
Okay. Thank you, sir.
All right. Welcome. So I'm too patient. Don't be disturbed. I'm doing this because you have a paper to retake it, right? So we need this patient to help all of us to come at a level, right? Okay. So we want to add all this. What do we get? Want to add all this? What do we get?
I got 11,651.93.
11,651.93. Okay. Remember that's this figure. So I can just highlight it in green. Right. Okay. Minus then.
So Isaac, I think your
Yeah.
screen is off. Your screen is off.
Someone is calling me. So someone is calling me. That's why.
Okay.
Oh. Okay. Is the screen back?
Yes, sir.
it's back.
No, it looks like it's loading. Okay, it just came back.
Okay. So according to, is it Stella? We had the additions of the cash inflows to be 11,651. All right. So now we're just going to subtract 10,500 from what we got. Having taught you this way, I believe that it will be easy for you to do for project B, right? I believe that it will be so simple for you to do this for project B. Is that not? Yes. I've answered myself. Yes, it will be easy for us. Yes, Isaac, it will be fine. Yes, I'm waiting for you to tell me the NPV for project A.
It's 1,151.93.
1,000. Bring it here. So this is equal to 1,000.
151.93. Hey, am I correct?
If you are wrong, we are all wrong. So we want to follow your guide.
It's correct.
Okay.
This is 93.93.
93. Okay. All right. So I'm trying to do for project B here. I'm trying to work out for project B. So work out with me. Do that with me. Project B is as what you see me do. 5,000. The initial cash outlay is 16,000. Okay. So that is project B for you. I mean, we have cash inflow of 7,000 discounted here. Cash inflow of 1,000 discounted down here. And then it goes on and on. So help me generate the discounted cash flows. Are we on? We are trying to do this for project B. You know that.
Yes.
This is project B.
It's carried. Nobody cares for the question. No, no, no.
Rita, kindly mute your mic.
Hope you can still see my screen.
Yes, please.
Hey.
I'm waiting on you, so you tell me what to write.
Looking at my final figure, it's like I'm making losses. So I think I'm wrong somewhere.
You can never be wrong.
No,
So
I made the loss. So it's not a positive figure. So
yeah. So what did you get? Just tell me what you got.
a debit of 5769.97.
Which a debit?
That is sorry.
Okay, you are
minus. Yes, sorry.
5,000.
769.97. But I don't have confidence in this figure. So let me start again.
Okay. Who else has finished? Who else has finished? Who else is done with this and then want to share with us the answer?
I'm also getting the same figure. Negative
Okay.
5769.99.
Okay. That's great. So we need the last person to come up with the answer and we go. But Stella, you can't do a business and generate a loss.
I'm getting a minus figure.
So,
I don't know.
Yes. If you buy Aboboya for 16,000, so look at this project as Uber and then Aboboya. Give me a second. Nana. Give me a second. Give me a second. Sorry. Yes, so I was talking about an Uber business and maybe Aboboya. Okay, maybe Aboboya will cost 10,000. Maybe Picanto, is it Picanto? No, Matis
Matches will cost 60,000. Or maybe this is Okada, and then this is Aboboya. So Okada business is generating you this, but Aboboya year 1 you are getting this, year 2 you are getting in that order, and then the Aboboya business is not returning you anything better. If you look at how the structure is, you may see that the figures are the same, but the value of 5,000 today, 5,000, or let me even say the value of 1 cedi today is better than 1 cedi tomorrow, right? The value of 1 cedi today. So if you are getting 5,000 today, if you discount 5,000 to the present day, or if you should get 5,000 at the end of the year and want to discount it to today's value, it's better than 5,000 that you would hope that it will come at the end of 2026, right? So the value of our monies depreciate a lot, and that's what we are referring to it as the discounted value, right? So 5,000 at the end of year 5 is worthless. It's worthless than maybe a 3,000. So if you have done it one after the other, you'd have seen the value of it. So let's see. If you discount 5,000 at the end of year 1, you are getting 4,600 and something, right? So the actual value, even though the money that will be in your hand is 5,000, but the actual value, what you can use that 5,000 to do at the beginning of the year, it will be around 4,600 and something, right? So this one, your cash flows were not coming as huge at the very beginning, right? It was just somewhere at the end of the period. This is supposed to be 5,000. Somewhere at the end of the period that you started getting huge cash flows. And then again, the initial cost is also high. So that's why you are getting a negative. Right? So you are not wrong. This is the right answer. Okay. Now, can we look at profitability index, PI? Profitability index. Okay. Okay, so between project A and project B, under NPV, which of the project will you go for? Let's make a decision here.
Project
Between
A.
project A.
Project
and
A.
Can you give a reason?
Because for project, okay, sorry, my dear, go on.
Yeah, go ahead. Yes, you can come up with the answer.
So for the first project, we ended with a positive figure of 1,151.93. And the second project, we are ending with a negative figure of 5,769.97. So definitely I'll go in for project A.
Okay, so that's the simple narration. We're choosing project A because it gives a positive NPV of the figure 1,151.93 as compared to project B that gives a negative NPV, right? So we are choosing project A because it gives a positive NPV. So the decision rule is if you have an NPV greater than 0 or equal to 1, right? NPV greater or equal to 1, then it becomes a viable project, right? If you have a project which is giving you greater or equal to 1, then it's a viable project. I.e., if two project has 11,000 and then one project has 11,000 and then the other one has 11,200, which one will you go for? Or positive 11,000 and 11,100. Let's say 11,000, 11,100. Which of the two projects will you go for? If you have NPV of a project, one is giving you, let's say, 110 cedis, and then the other project is giving you 115 cedis. Which of them will you go for?
The 115 cities.
Because a rational investor want to get a higher NPV, right?
Yes.
So
Yes.
I just brought in this because it is not always that you're going to get something negative, and it will be easy for you to identify. But anytime you have NPV being greater or equal to 1, we choose the higher one. We choose the higher one. That's all, right? In your investment decision, you want to be rational. You want to make high profit. So if you are thinking through 2 projects and one of them will give you a little higher profit than the other, then you go for that one that gives you a higher profit. That's all. I hope this is more practical than you imagine in class. Okay, let's look at PI, profitability index. PI works on a very simple. Yes.
It is saying calculate the average net income. That is all, eh?
Not at all. We are not done. We just answered one leg of the question A. We just answered this question. Right? We just answered this. We are now going to PI before we say again.
No, so I just read it. Which of the projects will you invest in? That was where we got to.
Exactly. Okay. Exactly. And then even that, we just judge that with NPV. We now come into PI, and then we also make a judgment there. We go to PB or PP, payback period, and then we make a judgment there, and then we do discounted payback, and we also form a judgment there. But in totality, we can look at all the 5 or all the 4 and then make it a final judgment. Do you get it? So these are elements that we use to test investment that we want to go through, right? So we just finished with NPV. I'm now going to talk about PI, profitability index. All right. So profitability index also works on a very simple
Please,
form.
1 minute. Please, 1 minute.
Go ahead.
If we are going to continue with the same figures, I think the NPVB might be wrong, the answer, because I've calculated it twice and I got negative 8,832.6. I don't know if anybody is getting the same thing. I went through 2 times.
That's too huge. Okay, well, let's confirm. Let's confirm. Who else has that?
I had
What did you get?
Negative 8,832.664.
Wow. How come? So I'm sure maybe you used a wrong figure that I wrote here. Check whether the last figure you used 500 or 5,000. Because I made a mistake with this, and then I've rectified it. You used 500, right?
Yes. So 500. I had 340.29, and the other figures going.
My dear, that's where the issue came from. Look at it. I
It should be 5,000, not 500.
I've worked on it. Right? It's 5,000 here. I realized, and yes. So sorry. I have caused your mistake. Is that okay?
Okay.
I'm forgiving, eh?
Yes, you are.
Okay. Guys, are we all on the same page, or some of you have gone past?
Sure.
So I want to ask a question. Okay. I want to know why when you are dividing the figures I realize the first one you use into brackets 1 plus 0.08, but subsequently you do 1.08 without.
Okay. So do you have your calculator with you now?
Yes.
I'm going to ask you to do something for me. Just something for me. Okay. So punch 1.
Okay.
Then punch plus.
Okay.
Then punch 0. 0.0 again.
Okay.
And punch 8.
Okay.
Which is this one. Then we can enter equal sign.
Okay.
What did you get?
1.08.
1 plus 009. 1 plus 008, you said.
1
Should I
plus
use the bracket?
0,
So I should not use the bracket.
Don't use the bracket. I just need you to enter what is in the bracket. This one. 1 plus 0.08. That's all.
1 plus 0.08.
Yes, that's all. And then equal to.
Okay, 1.08.
So I could have done the same thing here, 1.08, but that would be so much work.
Okay.
In fact, we had even done that.
Simplify
if you watch F in the very beginning, we had even done that. We had 1 plus 0.08 for all the 5. And then I said, well, you can reverse it. And then I revised it. If you have the recording, I'm sure you will see it in there. All right.
Okay,
when you grow, when you grow, yes.
So you see, you are simplifying it like this.
Exactly. So I was going to say that if you grow up in your finance element, you won't be writing this again, right? I mean, it's a waste of time. It's a waste of time. In exam, you try to find ways to cut down things so that you maximize the 3 hours or the 2 hours that you have, right? So if I have to go through writing this one's like this, if I had to go through writing these ones like this, I'll spend like 1 minute or so to do that in exam, right? But if you put it this way, I mean, you would cut off about 30 seconds. Yes, let me hear you. Sorry.
So marking will allocation be given to the steps, or the simplified answer is what will be considered?
Hey, marking. It's early days yet. Well, so this is how he marks. He would give you score. He would give you score for writing a formula. If you're able to identify a formula, I'm sure you get a mark for that. You put this one down, you get a score for that. From this second step, you can go to the final, right? Right from here, you can generate your final answer. You may not need this. You may not need to go through the steps. Right from here, if you have a very smart calculator, you can just generate your 1,151, right? And then all the other score will be given to you. Is that okay? So that is it.
But my answer is giving me negative 3,000.
For which of them?
For the NPV. The second one.
NPV. You have to check your figures. You really have to check your figures.
When I minus it, the 16,000.
Okay. You have to check your figures again. You have to check your figures again, because the answer that we have here is negative 5,000.
Okay. I'll go through it again and see.
That's okay with me. Okay. Okay, so we want to pick up on profitability index. It runs on a very simple concept. We just want to know the ratio of investment. So it will just give us the discounted cash inflow divided by the initial cash outlay. So it's the same thing. It's the same thing. The same thing that we have here. The same thing that we have here. That we're going to change some few things around it. Okay. So PI is equal to your sum of discounted cash inflow. This time around, divided. I told you it's a ratio. Divided by your initial cash outlay. Right. divided by your initial cash outlay. So how will it look like? Let me see if I can find the formula for you. Oh, it's sad I don't have the formula here, but maybe one of these days I'll find the formula and then share with you. But in the simplest context, that's what I've shown up there. The profitability index, I said it will just give us a ratio of the present value of the cash inflows divided by the cash outflows. Okay, so what do we get? If you have not done this workings right, you won't get it. So this is the sum of the discounted cash inflow divided by the cash outflow, right? So let me do project A for you, and then you tell me what project B is about. So I would have 11,000. This is where I'm picking 11,000 from. The total of the discounted cash inflow divided by the initial cash outlay. This time around, you don't put it in negatives. So you pick the absolute figure. Okay. So that's how the PI works. Very simple like that. Okay. Who is that? And who is done working it? So project B will be additions of this. If you have written it somewhere, additions of this divided by the 16,000. Okay. So what do we get? Yes, what do we get? Are we here? Stella, are you there?
Yes, so
Okay.
Please, I had 0.11066.
That's strange.
Yeah.
11,000.
Is it for project B or project A?
We are
It's
doing
project
for project A first.
11,000.
We are dividing 11,000 by 10,000. You should get it somewhere around.
I'm getting 1.8.
It's 1.11.
1.11. 1.11.
I'll pick 1.11. 1.11 seem right. Okay, so you know what this means? It means that if you invest every 1 cedi in a project, you are getting 1 cedi, 11 pesos as profit, right? For every 1 cedi, this is profitability index. How you are able to use your investment in generating profit, right? How your investment earns you profit. So it means that for every 1 cedi investment, for every 1 cedi that you invest in a project, the project will generate 1 cedi, 11 pesos in value to you, right? For every cedi investment made, you are generating 1 cedi, 11 pesos. That is what it means. Can we work out for project B? And then we form a decision.
Project B, we are getting 0.64.
Okay. So let me just write it. For what I'm telling you, you may not need to write it, but I need to let you understand what we are doing. right? So for every investment, for every CD invested, how do you even spell invested? The project generates 1 CD 11 pesos in value. All right, so that's the meaning for what we have up there. Yes, you were telling me about project B.
Yes, 0.64.
0.64. Okay. In my mind, you have your figures down, but if you can tell me so that your colleagues can follow from there too, maybe so that they can also understand.
Okay, so
what did you divide by 16,000?
10,230.03.
Okay, 230. Who had a decimal figure? Who had a decimal figure? So 10,200 and something point something. I had wanted to write that one, but
230, 10,230.03.
Give me a second. Yes. Give me a second, please. The holiday is so disturbing for some of us. Okay, I'm back. Try to be back as well. Okay, so we're dividing 10,230 by 16,000. Okay. If we do that, what do we get? Then Stella says that she gets 0.6. Did you get 63 or 64?
64.
Okay, 64. All right. So if we want to also understand this, what it means is that for every CD investment you make, the project will generate you 0.64 CDs, right? So based on PI, which of the projects will you choose? Which of the project will you choose?
Project A.
Project A, because it gives a higher PI, right? It gives a higher PI of 1 point. So the decision rule is PI should be equal to or greater than 1, right? When PI is greater than 1, we accept the decision. When PI is greater than 1, we accept the decision. Okay, or we accept the project, not the decision. All right. We can now move on to look at payback period. Where is it? So we've dealt with this. We're making another step to look at payback period. Okay, so payback period, a very simple concept, very simple concept. We are looking at the period at which you are able to pay for the cost of the project under consideration. The year where you were able to pay for the cost of the project. So you pick a loan of 10,500 from Stellar's Bank, EcoBank, to buy the motor, right? If you're supposed to use all the money that you are generating for every year, from every year to pay for the cost, in which year will you be able to satisfy the loan of 10,500? In which year? That's the payback period. The period in which you're able to finish paying for the cost of the investment. Did you get it? So if you have 5,000, go and pay it to Stella. If you get 4,000, go and pay. Go and reduce your cost of it. If you get 3,000, reduce your cost of it. So we are taking everything to go and pay until we will realize that, oh, okay, today I owe Stella 500 cedis, but I've gotten 1,000 cedis, or maybe I've gotten 900 cedis. So it means I'm not going to use all my 900 cedis to pay. I only have to pay portions of my money to Stella, right? So that's how we're going to do it. Very simple concept. Very, very simple concept. Okay. So how do we handle it? How do we handle it? Oh, I need to draw tables. I'm so lazy at drawing tables, but I'll try my best. I know it gets a bit disturbing in the morning like this when the kids are home and then you want to learn small. You don't understand why you should be learning when we are on vacation, when we have a holiday. My friend, why do you want to learn? Let's have some time out. Is that what they are telling you? And I'll try my best to close you on time so that you don't get exhausted. All right. So I'm picking up on project A. Okay. All right. Maybe you can use it. All right. So we need to do payback period. Hey, the figures are too small. 16 is fine. So at period 0, we will still be owing 10,500. Oh, why is it that the figures are small like that? Okay. As at period 0, we will still be owing 10,500. 10,500. So at the end of period 1, we can generate 5,000 cedis, right? So if we owe 10,500 and we generate 5,000 to go and give it to the bank that we generated, we got the loan from, how much will we be left to pay? So what this is how I'm going to work it out with you. Just observe me. At the beginning of year one, you'll be owing 10,500. At the end of the period, you are generating 5,000 cedis, right? So you can carry all the 5,000 cedis and go and pay it to the bank. So if you pay 5,000 to the bank at the end of the year, you would owe how much? It's 10,000 or negative 10,000 plus the 5,000. So you are using the 5,000 to reduce your costs. So how much will you be left to pay? Yes, how much will you be left to pay?
5,500. 5,500.
5,000. Am I right to say negative
No,
5,500?
negative 5,500. Negative 5,500.
Okay, that's perfect. That's perfect.
Hey, I don't
Great.
understand
So
it.
at the beginning of year two, okay. Who said it? So I want to mention your name and speak to it.
My name is Mercy.
Mercy. Oh, okay. But have you heard of Kofi Kinate's Have Mercy?
No.
You have to go and listen to that. Okay, Mercy. So
Yes.
do you have any form of investment? Let's say you're considering to buy an Uber, right? You're considering
Yes.
to buy Uber. And then Stella's Bank can give you a loan of 10,500, right?
Yes.
So they've given you some good terms of repayment. But when you project your inflows, you're going to get 5,000 at the end of year one, right?
Yes.
And then in your mind, when you get the money, you are going to use all the return, all the inflow to go and pay, go and settle the loan, right?
Yes.
So
Yes.
let's move away from the bank. Your husband gave you a loan of, no. Usually it's not the husband. So your husband took a loan from you, 10,500, right? 10,500 to do something. At the end of the year, he got 5,000 to pay to you, right? So we want to look at how much is left for him to pay at the end of the year when he generated 5,000. So anytime that he generates anything, he would use it to reduce how much he owe you, right?
Yes.
So that's what we are trying to do here.
Okay. Thank you.
Okay. Welcome. All right. So at the end of year one, we were $500. But in year two, 1,000 cedis to reduce the 4,000 to reduce how much we owe. So how much are we owing? 5,500. And then we having a cash inflow of 4,000. Okay. So how much will we be left to pay?
We'll still be owing 1,500.
We'll still be owing 1,500. Okay. So at the end of period three, we are expecting 3,000 cedis. But we only owe 1,500. So what do? Should we carry all the money to go and pay, or we just take half of it?
Half of it.
Half of it. But we are concerned about the period, right? So half of it means it will be 6 month period, right? We're going to use 6 month periods return to help resolve the 1,500. But we don't want to use our head to think about that. We want to use mathematical at that. So what I would say is that whilst you reduce the items one after the other, right? Whilst you use your cash inflow to reduce your cost, you should be observing the next inflow coming, right? So here we had 5,500 as cost that we have to. The next inflow coming was 4,000. So the inflow was lower than the cost. So we had gone ahead and reduced the cost with the inflow. At this point, the inflow here is higher than the cost that we are left to pay. The cost is 1,500. The inflow coming is 3,000. So when the inflow is higher than the cost left to pay, we divide the cost by the inflow. We divide the cost by the inflow. So we're going to say 1,500 divided by 3,000. So this is the 1,500. I'm sure you're going to say, but then we should use negative. No, we're picking the absolute figures. We are not using the negative. Okay, so this is what we have here. Divided by 3,000. The 3,000 is the inflow. The 3,000 is the inflow. This inflow, right? So what are we getting? What do we get?
0.5.
0.5. Okay. So now we want to compute the number of years that we have used to pay for this project. We've used year 1. So 1, 2, 3. 3 years. Is it true? No. We've not used all the 3 years to pay. So we've used 2 years, i.e., we've used 2.5 years to pay for this project, right? We've used 2.5 years to pay for this project. So it's going to be 1, 2, 2.5 years. 2.5 years is the payback period. So this is the answer. 2.5 years simply means 2.5 years. It's 2 weeks, not even though you see 5 years, but if you want to consider 2.5 years, 2 years, 6 months. I don't know whether you.
Isaac, can we please take the third year again?
You hear that there. So sorry. My network is disturbing.
Please, I'm asking if you can kindly take the third year again.
Okay. So what do we see here? In the third year, we had a return, or we're going to get a return of 3,000, right? In the third year, we're hoping to get a return of 3,000. Meanwhile, we owe just 1,500.
Sure.
We owe just 1,500. So the argument is that when inflow is higher than the cost, the inflow is higher than the cost left for you to pay, we divide, right? So we're going to divide the cost by the inflow. And then when we do that, that's what we have done here. 1,500 divided by an inflow of 3,000. We're getting 0.5. Is that okay? So if we do that, now we go back to count the number of periods that we have used. So we have used 1, 2 years for the extent of when I asked you, you said we're going to use half of it. And then if we think about half of 3,000 logically, if we think about half of 3,000 logically and want to divide the 3,000 by the number of months in a year, then we're going to get like 5,000. So 3,000 divided by 12 gives us how much? Yes. Yes. I need your opinion on that. You want to be
2.50.
Logical about it.
250.
250. So it means if every month you are getting 250, then it suggests that at the end of the sixth month, you would have finished paying for the project, right? So the rest left will be your profit or something that you're going to consume, right? So we're just trying to obtain the number of years that we're using to pay for a particular project, right? And then this is how we count it. 1, 2, 3. Even though this is 3, but when we considered it appropriately, it gave us 0.5. So year 1, year 2, and then half. That gave us 2.5 years. 2.5 years. All right.
Thank you.
You're welcome. Okay. Is there any question? Can you do project B by yourself?
We can try.
Okay. So I'm going to leave you try that and tell me your answer in the next 5 minutes. Okay. So let's try to go through and see if we can result something better. So payback period. So at the very beginning, we owe 16,000. Okay. So at the end of period 1, we are getting 700. So we're going to use the 700 to reduce how much you owe. You owe 16,000 plus 700. How much will you be left with as cost? Yes.
Negative
How much?
15,300. Negative 15,300.
Okay.
Is it possible you can zoom your screen a bit? If you can.
It means you have to check from your end. Right. You have to enlarge it from your end. Okay. So in period 2, we owe 15,300, but we're going to get 1,000 cedis. So you can use the 1,000 cedis to reduce
this. If we use 1,000 cedis, how much will we be left with to pay? 14,300 negative. Is that not?
14,300.
14,300. Okay. At the beginning of year 3, we'll be owing 14,300. But at the end of the period, we are getting 3,000. So we can use the 3,000 to reduce the 14,300. So plus 3,000.
11,300.
We're going to have 11,300. Okay. Negative, sorry. All right. So at the beginning of year 4, we'll be owing 11,300, but we're hoping to get 4,000. So we can use the 4,000 to reduce how much you owe. If we do that, how much are we left with as cost?
Negative 7,300. 7,300.
7,300. Okay. But as we go through, we are observing, I hope you're all observing the next inflow. So between this and then the next inflow, which one is bigger?
I'm going to talk to
I didn't get you.
The cost is still bigger.
The cost is still bigger. But we have observed, or we have resolved that
Please mute.
Joseph, please mute your microphone. Joseph.
Jojo. Sorry. Some of us, we have to be hiding. If not, this will be okay. So we owe 7,300. I was saying that we have to keep in mind that we would observe the next inflow side by side with the cost. So at any point in time that we realize that our inflow is higher, the next inflow is higher than the cost, we divide. But as it stands, the cost is still higher. So we keep on adding up. Okay. And we have 5,000 coming in. So how much are we left with to pay? Two 300. Is it true?
2,300.
Still as negative. All right. So if we want to consider payback period for project B, we've exhausted all the inflows, but we still owe 2,400. So if you want to form a decision with just payback period, which of the two projects will you invest in? Yes.
Project A.
Why?
Because the time to offset the loan for project A is at year 2.5. Then from the next 6 months to the 5th year is a profit to the business. But with project B, you have exhausted the whole 5 years and you are still owing. So definitely I'll invest in project A than project B.
Okay. So in effect, he's saying that project A pays earlier. With project A, we are able to pay for the cost earlier than project B. So if you have two projects, that one, the PB, let me put a name on this.
Isaac, the year 5, is it 2004 or 2003?
So Isaac made a mistake. It's a typo, 2003. That's true. Okay. So if we have two projects, that one, the PBP, the payback period is 7 years. The payback period is 7 years. and then the other project is 6.5 years. Which of the two projects will you go for? One project gives you a payback period of 7 years, and then the other gives you a payback period of 6.5 years. Which of the two projects will you go for?
I'd go for the 6.5.
Okay. The reason why we have to go for the 6.5 is we are looking at the project which pays for itself early, right? If we're able to pay for the cost early, then we're saying that the project is viable without we considering the cash inflows, right? But it's deficient. This approach is so deficient, right? It could be that, well, you'll be generating some good monies in the very beginning, but at the end, your inflows will be small. But so what I want to say is that for payback period, it considers the time at which the project is able to pay for itself. And then we usually want to pick up on the one which is able to pay for itself early. If you are able to pay for yourself early, if you're able to pay for the cost early, then we choose you. We choose that project rather than the other, right? But when we add on discounted cash flows, or when we think of time value of money, then we want to deal with just a normal period. Okay, so this is payback period, normal payback period, which is the fourth leg of the question that we are answering. It's just one question. We see the plenty things that we are doing. And then even this we have done for just project. Okay, project A and B. So, okay. Then next leg is for us to do discounted payback period. Discounted payback period. Okay. So what do we do? For discounted payback period, we're going to clench on or rely on the discounted values that we generated from here, right? We're talking about discounted payback. So discount your cash flows or discount your cash inflows. The project can still pay for itself or otherwise. Okay, so let's see what we're going to do. So you have to remember and then bring them on board. Okay. Let's see if I can draw a line in between. Yes, draw. Okay. So now Milana NC. Sorry. Continue drawing. I know you were exhausted, but you will finish very soon. I'm sure you will just answer question 1A. Next time you will think about others. All right. So here we want to first discount the cash flows first. You want to first discount the cash flows before you use the discounted cash flow figures to project a payback period, right? So first we're going to do discounted cash flows. Discounted cash flow. All right. Do you remember the discounting factor where we said that it's a CF divided by an open bracket R, small r, we mean small r. 1 plus r instead of 1 plus r. We raise it to the power nth periods. All right. I hope you've seen this before. What I've written here, I hope you've seen it before. Stella, you're exhausted, eh? Sorry. You close right now. It's a holiday. The weekend is long, so you can get some time to rest tomorrow also. Okay. But who's going to Kumasi today? No one?
I'm going to Kumasi.
Where? Angroga.
Yes.
Oh, okay. For the Farmers Day or what?
No. I think
Oh,
no.
okay. Okay. All right. So we want to discount this, right? We want to discount this. Negative 10,000, sorry, 500 divided by an open bracket 1.08 raised to the power 0, right? Raised to the power 0. I'm bringing up this guy with the power 0. Okay. So what do we get? Any number
To the power 0
which
is 1.
Oh, thank you. Any number to the power 0 is 1, right? So it means everything here, everything down here is 1. So it becomes 10,500 divided by 1. And that
1,
gives us
the same 10,500.
10,500. Okay, for the first item. Then we pick up on the cash flow from this side. As it stands, forget about this. Forget about this line. Forget about it. Let me just paint it black. Yeah. Okay. So we're discounting 5,000. All these figures, we've generated them all. So if you know them, just go and mention them. That's all. You don't need to stress. This is raised to power 1. No stress at all. Just like okay, it's okay. Let me not mention that. So 5,000 divided by the discount factor. I think it gave us 4,625.6. 29, okay, 29.63. Okay, that's what we did up there. Then we discounted 4,000. If we discount 4,000, what do we get? What do we get? We got 3,000 something. 3,004 something.
We got 3429.36.
26. Okay. Then we're going to discount 3,000.
That one, we got 2381.50.
Okay. 2389.50.
No, 2381.
81.
Yes, 0.50.
Okay. Then we discount 1,000.
Yes, 1,000 give us 735.03.
735.03. Okay. So the point of reference, the figures that we're going to use are the discounted figures. We are using the discounted figures to do the cash flow, right? To do the cash flow. So be mindful. All right, what did we get with the 700?
Please, the year 2. Yeah. The year 2 is 3,429.36, not 26, 36.
Thank you. Thank you. All right. Let's go. What do we get with the
476.41?
476.41.
Yes.
Okay. All right.
Sir, please, the year 2, we are still giving us. Sir, please, the year 2 is 36, not 346.
Okay. So this is discounted payback period. DPBP. Discounted payback. I cannot write plenty, but in exam, if you have time, you can write everything. No one will penalize you.
right? Discounted payback period. All right. How much do we owe at the very beginning? Negative 10,500. Remember? Negative 10,500. All right. Out of this, in period 1, we're going to get 4,629.63 to pay, right? So what will we be left with if we pay that much? So look at it. Here it will be plus this, right? So what are we left with to pay? This would have been good in an Excel sheet. Excel would have done this for us. Okay. So what do we get? What do we get? Are we there? What do we get? We have negative 10,500 as a cost to pay. At the end of year 1, our cash flow was 5,000, but when we discounted it, gave us 4,629.63 pesos. If we use that discounted value to pay part of our 10,500, how much would we be left with to still pay? Must we also look out for the next incremental cash flow coming in? Yes, yes, yes.
Isaac.
Yes.
So please, are we taking out the 4,629.63 from the 10,500?
Exactly.
So we are getting what I have here is negative 5,870.37.
Yes, I got
You
you.
have to forgive me. Your line was breaking. 5,000.
Okay, so 5,870.37.
0.37.
Yes,
Okay.
negative 5,000.
Okay, it's here. This is the negative. Okay. So we owe this much, but we have to compare this to the next cash flow coming in, the next discounted cash flow, and note whether this is bigger than that or the inflow is bigger than the outflow. Right. So between 5,000 and 3,000, of
That
course,
should give us a debit
5,000
of
is bigger.
5,870.37.
Okay. See, the bank is talking about debit. When I hear debit, I get disturbed. Everything is not about debit too. You see, debit is a good sign, unless for the bankers. Well, it's okay. In another accounting class, I'll talk about debit credit. Okay, so the next inflow is 3,429.36. Okay, so we're going to use that to reduce how much we owe. If we do that, what do we get? What do we get? Yes, what are we getting? Negative 5,870.37 plus 3,429.36. 36. What do we get?
Negative 2,441.01.
Negative 2,000.
2,441.01.
Okay. So we have to consider this against the next inflow. Between this and then the next inflow, which one is higher? Which of them is higher? The cost is 244. The inflow is 238. So it means the cost is higher than the inflow. Right. So we keep on paying. We keep on paying. Okay. So plus the next inflow is 238. Okay. What do we get? What do we get with this?
Negative 59.51.
Negative 59.51. 51. All right. That's good. That's good. That's good. Okay. So between the cost, this cost, and then the next inflow, which of them is higher? Between this cost and then the next inflow, which of them is higher?
The inflow is higher.
So what do we do? If the inflow is higher than the cost, what do we do?
You do that division.
Okay, so we have to divide the cost 59.51 by the next inflow, which is 735.03. What do we get?
0.081.
0.081. Okay. Okay. So what becomes of the answer? The discounted payback period. DPBP is equal to how many years? Who can count it and tell us the answer? Okay, let us count it together.
It's 3 years.
Go ahead.
3 years with some months.
Okay, so it becomes 3.08. Let's leave it in 2 decimal places. 3.08 years. So 3 years, maybe some months. Right, that is our answer for project A. Then all what we are doing is for project A. Okay. So can we go ahead and do project B? Can we do project B? This is just for project A. So with project B, with project A, the discounted payback period is suggesting to us that if you discount your cash inflows, you cannot pay for the project in just 2 years or 2.5 years. Rather, you would finish paying for the project in 3.08 years. Right? It tells you the wealth. of or the importance of discounted cash flows, right? Or importance of time value of money, right? Okay. I just need someone to tell me one thing. Can we work out for project B? If I get that from the person, then we close. Can we work out for project B? Or should we work out for project B? Okay. Why shouldn't we work out on project B?
Because it doesn't have a definite payback period.
Okay, so even for the normal cash, I mean the normal payback period, the project could not pay for itself, right? Even with the undiscounted cash flow, right? Even with the undiscounted cash flow, the project couldn't pay for itself. We were left with a deficit of 2,000 something. You remember? So it means that when we discount the cash flow, we still can't pay for the project, right? So it should be a narrative that you write. But if you also go ahead and work it out, that would be, though it will be a waste of time, but you would have just shown your crutchy powers. So it is, for me, it is just a waste of time to work it out. But you could work it. The person who would work it, and then the person who would be able to see on paper that since the project couldn't pay for itself, even with the normal cash flow or even with the undiscounted cash flow, it means the discounted cash flow may not bring any change, right? You can write a narrative like that to just avoid working out, right? And then you beat time to go, right? So even with the normal cash flow or even with undiscounted cash flow, the project could not pay for itself at the end of the period. Hence, with a discounted cash flow, the project cannot still match up or pay for itself, right? So that becomes our answer. Suggesting so that when you want to consider discounted cash flow in your argument, you still choose or go out for project A. So all together, everything put together, right? Project B wasn't returning anything better in terms of NPV. It was giving us a negative NPV. Project B gave us a PI of less than 1. Project B with payback period, we couldn't recover the project, or we couldn't pay for the project at the end of the period. The same way with discounted payback, we cannot pay for the project, right? The final decision will be that we shouldn't accept project B, i.e., the right decision is for you to choose project A because it yields a positive NPV, it gives a favorable PI, and then it gives an acceptable payback results, right? The payback results with project A is much more appreciable or acceptable as compared to project B. That will be your conclusions that you put up, right? That will be your conclusions that you put up. 1, making a case that project B didn't result in any better NPV. It gives a negative NPV of 5,000 something. It gave a PI which was less than 1. I think it gave around 0.63 or 0.64. And then we also couldn't recover or couldn't pay for the project using the payback period. The discounted payback can't do any magic. Hence, we are rejecting, or we shouldn't accept project A, rather go on to choose project. We shouldn't accept project B. Rather, we go ahead to choose project A. The reasons underlying the choice is that project A yields a positive NPV. It gives a favorable PI. You can quote them. Give an acceptable payback periods results. It gives an acceptable payback period results. Okay. If you don't mind, I'm sure I'll pick your questions and then I leave you to have a good day and then think about something better the next days ahead.
Thank you, sir.
Yeah, I think we are okay with the first leg of the question. I think the explanation is better. Thank you.
You're most welcome.
So this is only for question 1.
Yeah.
That's question 1E. Question 1E. Question 1B is waiting for us down there.
But sir, the lecturer kept using the quarter year thing. So he wasn't going fully on like 1 year, 2 years and things like that, but he was also using the quarterly.
For the payback period.
Yes, and others.
Oh. Okay. Oh, I don't know. I don't know. If you can guide me appropriately, then maybe I'll come to the state. I mean, of the lecturer. I don't know. I didn't join the class, so I don't know what he was exactly.
Please, and the others too can talk about. Maybe I'm the one not saying things right. So if the others too are concerned about that, I think they can also chip in. Thank you.
Welcome. Okay. I think we are fine. But you didn't tell me the topics that the lecturer mentioned. But I know definitely capital budgeting will come. I know there will be cost of capital, which is going to talk about weighted average cost of capital, and then CAPM, capital asset pricing model. Then risk and return will come. Risk and return, we're going to look at expected return, we're going to look at standard deviations, we're going to look at variances, you look at some no, you guys don't do coefficient. And then we will move on to look at, did he mention financial statement analysis or ratios? Will ratios come?
Yeah, the financial statement will.
Go ahead.
Yeah, the financial statement, that is where we had the income statement and then the
balance sheet.
The balance sheet, yes. So he made mention that it will come. That is the fundamentals.
Okay.
Yes.
Okay. Okay. So share with
and
me
then
the
time
areas
value.
so that.
Okay, let them send it to you.
For
We spoke about time value
of money.
Yes, bonds.
Okay. Bonds, stocks and bonds. Yes, stocks and bonds will also come. Okay.
Capital
so
budgeting.
we're going to.
And WACC, WACC.
That's WACC, weighted average cost. W is weighted. A is average. C is cost of. The last C is capital.
Yes.
WACC, it comes under the broad annuity. Okay. Okay. All right. So we will look at all those, but share with me so that I'm guided with what I'm doing with you.
Okay.
All right.
So when
Enjoy
again are
the
you having
rest of your day.
session like this?
Okay, so Isaac, I'm also wondering if you can give us a sample based upon what we've studied today. Can you also give us another sample question so that we can try our hands on it? Because this is not the exact question that will come.
Sure, that's true. Yes, I'll try and do that.
So please, when are we meeting next?
When are you writing the exam? I have to know the time so that I can also.
On the 18th.
The exam is right around the corner.
It's too
on the
18th.
Long.
Usually, I think you need just about 4 meetings to understand this, or 5. So okay. I'll return to. I'll get back to the course rep on the day.
Okay.
Because tomorrow tomorrow will be a very tough day, but maybe we can do evening, tomorrow evening. I'll check with my timing and get back.
Okay.
All right. All right.
Thank you so much for
Okay.
your
Colleagues,
time.
please, can we stay on for just about 3 minutes?
Okay. God bless you, sir.
Okay, Sir Isaac, thank you. And
most welcome. I have to leave.
Okay, sir.
Wait, I mean, I don't know where my Ayukra is. Bye.
Colleagues, good morning once again.